Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday the 13th of July. Starting off with the FTSE 100, where we're back above that old March support there, which was around 73.35, and above the June low, which is probably more important, 74.01. Above that, looking for this market to test that April resistance line, which has been rather horrible over the last couple of months or 3 months, at around 75.80. That's also the level of the 50-day moving average, so hopefully this market can head up there and also obviously take out the 200-day line around 75.50. At this stage, early and end of day close back below 74.01 would then suggest we have to do yet more consolidation at that November uptrend line in the 72.50 area, but hopefully we're out of the woods. The only thing which is missing is the RSI to be back above neutral 50, which it hasn't been back above since the beginning of May, which is a long time. Well, the RSI did work in terms of being oversold under 30, and that has been on all the dips of the recent past the place to buy the index. So maybe 72.80, 72.60, that kind of thing. So anybody who got in there would be relatively pleased, I would assume. On to the DAX, which was never as bad as the FTSE, because obviously the DAX has maybe more to it than the UK market has at the moment. Here we're back above the 50-day line. Gap closed buy signal yesterday, but I think closing both of those gaps down that we had at the beginning of the month, but it's pretty strong stuff. And above the rising 50-day line, 15,900, looking for this market to at least retest 16,300, 16,400, which was the May-June bull trap double top. Best case scenario at this time, probably to hit a line which I'm just adjusting actually, because I think it's a little bit too steep, but a line of resistance there from back in August last year. That's currently heading to around 17,100, and if we're lucky we might get that by the end of this month, but obviously hopefully during August at some point. The other point to note here is that we have actually broken a line of resistance there around 15,800 from back in June. So as I said, this market relatively stronger than the FTSE. The RSI here also above neutral 50 at 50, just under 56, which is right in the box seat for recovery. This stage well below 15,600 and the floor of that channel from last summer, delaying the upside scenario. On to the Dow, which has been in recovery mode. We had our umpteenth test of the 50-day moving average at the beginning of the week. We've broken back above that pesky April 2022 resistance line around 34,000, and now hoping that we'll finally go with it over 34,500 and head up to the top of that rising March trend channel, heading for 35,100, hopefully as soon as the end of this month. At this stage, the downside hopefully limited to 33,600 and that rising 50-day line, but the 50 and 200-day lines both rising, which tends to be a decent continuation signal, or at least a show of strength. Another market which has the 50 and 200-day lines rising is Bitcoin. Here we're stuck in this bull flag, which we've had since the basically 21st of June. The floor of the flag there, 29,500. We're still looking for an end-of-day close through 31,000. That should be the trigger, enough of a trigger to get us up to 35 or 36,000 even, as soon as the end of next month. Obviously it'd be nice if it happened this month, but obviously the way this market's been trading over the last few weeks, it doesn't look as though it's in a big hurry to go anywhere. On to the stocks, and starting off with ASOS, which is obviously rather bigger than most of the stocks we look at, but very exciting here in the sense that we've broken that May resistance line. That was around the £3.80 level. Above that, looking for the top of that broadening triangle from June, as high as £4.35, and that could happen as soon as the end of this month. The key here is actually getting back above the 50-day line. That's around £3.92. We haven't been above the 50-day line properly since back in March, so that would be a decent trend-changing signal. RSI now back above neutral 50, which is nice. So if we close above that and close above 380, we should be on the way to the mid 430s. On to a stock which is rather less high profile, but had a decent update today, Corero network, and the reason for inclusion today is that the shares gapped up earlier this month. They've gapped up again, and so that double gaps does suggest that there could be a turnaround here, at least up towards the 200-day moving average at around 8 pence. big picture target maybe back to the 11 pence area, but understandably this is not a stock which is, given the numbers are not that great, not a stock which is maybe appealing to many, but maybe 11 pence by over the next couple of months could be possible if we break through that 7.5 pence zone. More interesting and liquid perhaps is Ceres Power. Here we've got a turnaround a bit like ASOS, so breaking a late March resistance line there and the 50-day moving average this week, which has been very impressive. That's rising now, £3.15 above the resistance line there at 3.37. We're looking for as high as £4.10 as soon as the end of this month, maybe the next 2 to 4 weeks. Key here probably breaking the 200-day line around £3.63. We haven't been above that properly for a long time indeed, maybe back in the end of 2021. So this would be a decent turnaround. Obviously we're on alert for a bull trap through the 200-day line, but at the moment above 380, looking for that £4.10 area. Onto a stock which has behaved itself in the sense it's gone up and it's stayed up and it's gone it's gone towards where we wanted it to go. Unfilled gap, massive unfilled gap to the upside, bear trap gap reversal for this stock. Above the 50-day line at 26 pence, we were looking for 42 pence as soon as the end of this month, and hopefully the way things are going, we might even get it by the end of this week, but at least the turnaround has been strong there, and above resistance on the way down 31 pence, certainly looking for 42 pence over the near term. Onto a stock which has strong credentials at the moment. We've got a bull flag here. We bounced a little bit bull flag bear trap there below 20 pence, but nice key reversal up and still looking for as high as 33 pence maybe by the end of next month, the longer we stay above the 20 pence level on an end of day close basis. It looks like a golden cross there, which was earlier this month, and unfilled gap, 2 unfilled gaps to the upside, or at least one unfilled gap to the upside there back in May. So this does look like a very strong situation, even though obviously it's not the most liquid looking situation in town. Speaking of not too liquid, we have Graft Polymer, which where the shares are finally responding to recent better news and expansion plans. Here we've got the 50-day line there around 4 pence. That's the target there over the next couple of weeks. There's bullish divergence there as well, so let's see if the shares can make good on those signals. The initial July support there around 2.6 pence, so an end of day close above that, we're looking for 4 pence, and maybe after that by the end of next month as high as 5.25, which was also resistance on the way down in May. The best thing here would be no persistent action back below the 2 pence level. On to one of the more followed stocks around, Helium 1, and here another stock which is behaving itself very well. We have that abandoned baby down there at the low, so it was a sort of a bear trap right down towards the all-time lows for the shares, which I think were around 3 3/4, so that was a bit of a bargain opportunity there, and it looks like some people took advantage of that. The bear traps took us to an initial target there around 7.6 pence. Next target there up to 9.5, so that was looks like that's going to be pretty close. And if one looks back, you can see that above 9.5, we could actually get a decent upside there towards the May, an April resistance line projection from back in early 2022, as high as 14 pence by the end of next month. So let's see whether Helium 1, after that massive bear trap, one of the more satisfying bear traps that you can ever see, one-day bear trap, will head up towards 14 or 15 pence by the end of August. Weekly close above the November resistance there around 9.2 pence would be just what the doctor ordered. Moving on to a stock which had decent news today with the FDA, which is like the man from Del Monte these days. Here we've got a rising 50-day moving average there from IQAI, rising trend channels, looking for a retest of the March resistance around 5 pence actually, and that could hopefully happen by the end of next month. If you're cautious, you want to see proper price action or a clearance of the 3 pence zone, and because there is very little resistance between there and the 5 pence mark, and obviously not back below 2.5 pence, the 200-day line, at any point. Petro is next, and here there's been a bit of rug pulling as well. A Helium 1 type one-day bear trap that would have got rid of most of the weak hands, one would imagine. We're heading for a gap close by signal as well after that bear trap, so an end of day close above 4.7 pence, and we can see the shares heading up to 8 pence as soon as the end of this month. Ideally we also hold above or close above the 50-day line today as well, but it'll be interesting to see whether that bear trap there does the business for Petro. Speaking of bear traps, there was a rather nasty one in Petro oil and gas that happened yesterday and the day before, just gouging out people below 10 pence, which was rather nasty. We were looking for support to come in at 11, but the shares overshot on the downside. Nevertheless, we still have the aftermath of that golden cross there from the end of last month, the golden cross buy signal between the 250 and 200-day moving averages. Initial target here 15 pence, so that resistance line from July last year. Next target maybe by the end of the month, if we're lucky, up to 18 pence. But want to see the shares remain now above the 11-12 pence zone, even after that bear trap that we had yesterday. On another stock which is progressing, and I think this was an FDA situation as well, Renalytix, here making good progress after that bear trap gap reversal. Another nasty bear trap there, but hopefully there'll be more of these in the market over the course of the summer. But the top of that resistance, top of that rising trend channel there, as high as £1.75. Looking for that to be hit by the end of next month, especially while we remain above the late June resistance at £1.22. So that is looking pretty strong as well. On to a stock which I haven't covered for a few weeks, Tirupati Graphite, and here a bit of bear trap activity below the 32 pence level. Looks as though the shares have basically stabilized in the mid-30s. Looking for an end of day close above 36 pence to then give us a retest of last month's resistance at 42 pence. But I suppose the key here is also how well the company is doing operationally, and that seems to be building reasonably well at the moment. Just a couple of stocks to go now. First one, which is making its debut here, Trustpilot. Here we've had basically a bear trap from below the October support there, so a lot of bear traps today. 65 pence the bear trap level. At the bottom of the gap there at 70 pence, so above 70 pence, we're really looking for the shares to hit the top of the range there around the low 90s, and also hit that 200-day line at 92. Last stock of the day is Watches of Switzerland, which I've also never covered here before. Here we've had a bear trap gap reversal. We've broken above the 50-day line as well at £6.72. Above the June resistance at £6, around £6.92. We're looking for the shares to hit as high as £9, which is the top of that broadening triangle from back in March. So a decent looking setup. And the final thing there is also we've had a bear trap island gap, so an island reversal, gapping down then gapping up after making new lows. So this looks very encouraging indeed, especially in terms of having got rid of the weak hands, and also there is bullish divergence as well, so lower lows for June and July, higher RSI trace, so maybe people were accumulating that stock. That's it from me today. More updates tomorrow.